How's it going, everyone? Welcome to the first of many monthly breakdowns. So this video is basically a review video recapping on the previous month. We're not going to be looking at new trades as per, so to speak, in these videos, but what we are going to do is talk through the trades that we did each month as we go by. Now, I think that this is an additional way to learn, and a good way to learn at that, because what it's going to do is show you the reasoning behind each trade, just a recap after they've actually played out. Now, I know I analyze the trades and send them out before they happen, but I also think it would be useful afterwards to see, did they work? Did the analysis work? And did we manage them well? So we don't want them to go on too long. We're not going to talk through every single trade we took in a month. What I'm actually going to do this time is focus on GBP AUD only and just talk through the trades we took here. Now, this was a really nice pair for us. Definitely the star of the show for our October trades. Now, generally, I'll make these videos at the end of the month. I am making this one now because, well, I just want to get started, but I don't want to talk about November until we've closed off the month so that we have a whole month of progress, wins, and losses to talk about. So, diving into the video then, let's not waste any time. We're over on the Discord, looking here at the results for October. Now, we started back at the start of October. Didn't actually post any results until mid-month, but we do have here the 4th to the 9th, the first week of real trading inside of October. So let's talk through this then. First week, 4 trades, 2 wins, 1 break even, generally 2 break evens. One was a very small 8-pip loss though, because I changed my mind on the trade, saw a different possibility and decided to get out before things got out of hand. So looking at those results, first week was okay, 182 pips, decent progress, 3 to 7%, really nice gains there. The profits did depend on whether or not you closed all of the trade. Now, this is the actual setup that we took, was a short position from here. We brought it down, I think we closed half at 150 pips. So where will that have been? Around this point. Okay, so we caught pretty much the low, very nice. But took their 150 pips. I know I did say to close half the trade, which is why we do have, of course, the differentiation between the 2 and the 5%. So it really would be about 2.5% to 5% profits there, depending on whether or not you close the whole trade. Now, as per my advice, it was a half closure. So you actually, based on the advice I gave out, would have closed 2.5% on this move. Now, I know that a lot of people, probably half or more, actually closed the full trade here because of the nice trade that we'd already caught. People were happy with the profits. That is why, of course, I added there the 2 to 5%. So that's the first trade. Now, why did I take this trade? Well, the reason being, I'm going to run through it from the top, bring it down, and show you what I was looking for. So basically, what we had here in this market was a overall downtrend. If we focus on these higher highs, higher lows, okay, we can see here that the market formed lower low, lower low, and then what we actually did was come back up, trade into this supply zone here, form a lower high, and from there I was interested in selling the market. Now, I was looking for, when we hit this area, a retracement to form essentially an inverse head and shoulders to come lower. Now, we never got that. The market pushed down, but I did see selling opportunity again when we came and retraced back into that zone. So we always were focusing on really this midpoint, okay, this area here, where we'd seen 1, 2 reactions. So I was waiting for a third reaction, trade into this zone. As you can see, we do have a supply zone there as well. And then I wanted to sell that off with a stop over that supply zone. As you can see, that's where we position the stop loss to bring this market down lower. Now, what I was looking for was for price to trade back down into this low point here. Now, the reason being, if we look at this market, generally, I was looking mostly towards this kind of price imbalance here, maybe 1.78, okay? So we'll see. We have here 1, 2, 3 resistance, and then we broke through, retested, and I was essentially expecting this to come and get retested again. So I really wanted to see the trade come through into there. Now, we were only targeting this point because the risk reward was already amazing, and we didn't need to try and push this thing too far. So as it turns out, the market was not ready to do that. It appears here that this was the low point of a trend, and the trend actually reversed from this point. So while we did get a nice sell-on opportunity, we didn't get it to fulfill all the way into targets, and after closing half the trade, it actually then ran back to break even. So that was the first trade, generally following the trending motion, okay, because at this point we didn't know the trend had switched direction. All we know was here we had supply zone, push down, retrace, trade back in, push back down again, and then on the push back up, was looking there to sell this thing off and bring it down into the low. So we did that. I spotted possibility of reversal, decided let's take some profits, and that was the right thing to do. Now, this is the importance of being able to react to the market as it flows. We don't want to sit in a trade if we think it's going to reverse. We want to at least secure some profits so that if it does reverse, we aren't leaving empty-handed. So that's the first trade, nice and simple. Generally following the trend, okay, lower lows, lower highs, supply zones, and of course areas of interest. As we can see, supply zone and also a 1, 2, 3 resistance provided the entry that we wanted to see. So in terms of the actual entry, if we focus here on the 4-hour chart, I'll show you why I entered where we did. So if we look, let me just scale the market back to this point. If we look here at our entry, what did we see? Okay, we saw a push into that zone, big bearish engulfing. Now, this big bearish engulfing was really the trigger for this trade. Now, that is where I would have got that confirmation. That's where I got the confirmation to sell and decided, okay, I want to go short on this market now that I've seen this big bearish reaction. Now, of course, entering down here would not have been good practice because we'd have to have a stupidly wide stop loss, 120 something pips, and the risk versus reward on this trade essentially would have been ruined. We'd have only just got a 1 to 2 all the way down into that second target. And I don't really like doing that. I like to make sure we can get pinpoint entries so that we can maximize our profit potential so that we can actually manage more losses and still stay in profit. So looking here then, 1 drive, 2 drive, forming that high point in the market, big bearish reaction shows me that, okay, the market is ready to turn down now. And then I actually looked for a pushback up into this key level area, 1.81500, to actually then roll the market over. Now, if we look at that, we waited on confirmation. So we didn't get the entry exactly as high as we'd have liked to, but when we got the confirmations, we then entered and looked to bring this thing short. Now, it worked out quite nicely for that first target. So that's the first trade broken down for you there. We can see how that won. The methods I followed: supply, trend, direction, and of course focusing on key levels as well for our targets and for our entry point. So that was the first trade that we took. Okay, that was the first trade on GBP AUD. Now, if we look at that, then that is that 150 pip winner there, that 2.5 to 5% profit. So that was generally it for that week. After that, pretty much just 2 break evens. That was the bulk of the profits for that week. Now, we also took Euro GBP, a 1-to-1 trade, crazy volatility, saw the profit fly in, but the market was moving mad. So I decided, let's take it, let's get out, 2%, start the week. I believe that was on the Monday, cannot complain. So in week 1, 182 pips, between 3 and 8%. Okay, very nice week. Nice start to the month. So the second week then, 2 wins, really nice opportunities there, 7% total. Now the first trade, Euro GBP, second trade, GBP USD. Textbook trades, this one, 2.5 risk reward. This was rebuying Euro GBP. We continually brought this 3 weeks in a row, I believe. Let's just look, yeah, 3 weeks in a row, profited every single time. So Euro GBP, I'm not going to dive onto these charts. I'm going to stick to GBP AUD on the charts because I think that, being the star of the show, I don't want to get confusing. I don't want to waste time. Let's just focus on what's important. But week 2, very nice. 2 trades. Notice how we have a low frequency of trades and a good profit there. Okay. That is what we like to see. Minimal trades, but great opportunities and high profit opportunities when we get them. So 2.5 risk reward on Euro GBP and 1 risk reward here by the looks of it on GBP USD, considering we only took 2% profits there. Oh yeah, okay, so we had 2% profit rolling on GBP USD as well. I remember that now. That was the short trade. So essentially 9% that week, but we were holding 2% through into the next week. So 16th of October, here we are. Looking at this then, big week, 400 pips, 20% profit. Pretty insane week as it stands right there. Now, Euro GBP, we brought again. Okay, took that profit there, 5%, 2.5 risk reward again. GBP USD, that was that finalizing that trade, closing up the final portion of that trade, and locking in the profits. Now, back over to GBP AUD then for the bulk of this week's profit again. Okay, 9.5% on GBP AUD. So what I'm going to do is dive into these 2 setups now and show you why I took those. So let's look at this first opportunity. Now, I do have them all mapped out just so that we can get to them easy without wasting time. And basically what I'm going to do is just talk through this trade here. So as we know, we took around 2.5 risk reward on it, I believe. Let's just have a look. GBP AUD 2.5%. Okay, 65 pips. All right, this one was an early closure. So 2.5%, 65 pips. Let's just run it back to how much we actually secured. So that was an early closure then. We took that just there. Now let's break it down. I'm going to drop to the low time frames because this is where the trade was really formulated. The 10-minute chart is what I was viewing for this particular setup. So here's the market. This is what I saw. Now, this was an interesting setup. This was a very good example of the scaled in methods. Now, using the same methods I normally do, but scaling it in so that we can catch more trades and get more opportunities. So what I saw here was a market that was bullish, okay? Bullish, bullish, bullish. And then what we actually did was come in and form this low point here, around 1.8250. So we can see there, we have essentially a demand zone. And what price managed to do was actually push through that demand zone and breach this low in the trend. So this low here was taken out. And that said to me that, okay, maybe this market has some downside momentum and is ready to actually push to the downside. Now, the entry was then taken from this area here, this little cluster of consolidation, these wild wicks. Now, the reason being, price traded into this area around 1.8290, retested that resistance point. Let me just mark that on as well. 1.8295. This area here, we came in, tapped in multiple times, and then we actually rolled over. Now, when I saw this rollover, the entry, I believe, was triggered from this bearish candle here. Let me just move these so that we can see it nice and clearly. This bearish candle here, this bearish engulfing candle, okay? That's the area in which I wanted to sell this market because what did we see? A push into the zone. Now, these downside wicks, while some people might see them as bullish, okay, as a rejection of downside prices, they showed to me that the market was trying to move down. So it's all about context. Now, if the market had formed a higher high, a higher low, sorry, in the market here, respected this demand zone, then seeing these wicks could have been a completely different context and could have meant a completely different thing. This could have been a rejection of these downside prices, ready for the next leg of upside. However, because we'd seen the trend structure give way, the low in the market give way, I was then actually looking at these as attempts to push lower. Now, we saw that bearish engulfing candle. That was a nice selling opportunity brought into the market there. And then after that, yeah, a little bit of rollover, a little bit of noise, but then bam, the market really fell off and fulfilled the targets we were looking for. Well, no, it didn't actually. Let me just talk through that. So the area I was targeting for this trade, 1.8150. So of course, always focusing on the key levels. Those 250s, those 50s, 750s, that's the area I was looking for. Now, if we look at the market, closed this early purely because we had a hefty amount of profit rolling this week already, okay? I was very, very happy to just take an additional little bit of profit off the table there, and that is exactly what we did. So yeah, it was an early closure for me. 2.5%, really fast profits though on that movement. And because we are in an overall uptrend, we do have to be cautious about holding trades too long. So we took that, can't complain about that, 2.5%, 65 pips, 47 pips stop, 1.4 risk reward. Yeah, we could have held it longer, but what actually happened is price did not manage to reach our target level. So this is why we need to be thinking about the context of our trades always, okay? Seeing that the market was making higher highs and higher lows, we generally know then that the market is in an uptrending motion. So seeing these higher highs, higher lows forming consistently, then turning into this low time frame, lower low, lower high. Yes, it provides a selling opportunity, but we do have to be cautious of these lower levels because chances are we're going to retest and then go higher. Now, I did believe that this key level needed to be traded into, but what actually happened was we reacted from 1.81750. Okay, so this little zone here, and that is where price actually began to bounce. So in this instance, this did form a higher low, and the market then did begin riding back to the upside. So we wouldn't have fulfilled our targets anyway. Granted, we definitely could have held this out to this point. Now, if there's anything to learn from this trade, other than, of course, the reasoning why I took it, it's we could have held it out longer. So this just gives us an example of why patience is so important. And in this example, it's something that even I can learn from as well because I closed this trade early when really I could have held this out longer and made some more profits from it. So, we could have instead targeted this point. That would have been a better trade. That would have been 2.4 risk reward. That would have been around 5%. A very impressive, very happy to take trade. So something for the future. What I'm going to say about this one is generally wait for those key levels to be met. And always focus on, we had a price imbalance here. Generally, I'm not going to claim that I am perfect with my trades, and even I can learn. In this instance, it would have been better to actually just hold my own and be patient with it. Would have brought us more profits. Okay, so there we go. That is that trade. Let's just put it to where we actually caught it. 665 pips. Sorry. 1.4 risk reward, 2.5% on that move. So there we go. That's GBP AUD. 10-minute chart trade. Very interesting methods behind it. Essentially, yep, counter trend, but focusing on this near term, this low time frame trending structure, and the fact that this market went so bearish through a demand zone. Now that tells me that this is ready to go lower, and if it gives me confirmation, I will take it lower. So the next trade was absolutely amazing. This was a great finish to the week. I'm sure everyone remembers this. This was a Friday trade. I actually used 5-minute time frame. Is it going to let me go that low? Yep. Okay. I used a 5-minute time frame for this opportunity. And basically, it was the same exact setup. Okay. I'm going to show you what it is that I'm seeing. So we saw then, remember back here, we saw this low point push through this low point. Okay. So this pushed beneath this previous low, and then retraced into this zone and fell. Well, what happened here was, if you see, that's now formed a supply zone. Okay, price retraced, retested into that supply zone, and then if you look at this motion here, where we have this kind of sideways consolidation, and then this push up, and then this push through that level. If you look at that here on the 5-minute chart, you see that the exact same thing happened, just on a lower scale. Okay, so we have that sideways consolidation, price here pushed through these lows. So if we actually just mark those on the chart there, we can see that price actually closed beneath these two low points. So this then once again told me, okay, maybe this market is ready for a sell if we can push back up into a key level of interest. Now, the entry point for this one, key level, of course, 750, 1.82750, sell limit, because we're in a supply zone and we've seen the trend structure change. We know that we want to catch it from a nice precise level there. Now, in this trade, we had a 100 and 25 pip target and a 30 pip stop loss. So scaling it down, let's just watch this trade, see how accurate it was. So our sell limit was triggered. The market rolled over. Now that provided confirmation there for anyone who didn't actually take the sell limit. And then after that, the market flew all the way down and wicked just through the target. So you'll see there 125 pips in 6 minutes. A really, really impressive trade there. That was an amazing one. Now, I believe there was a catalyst of news there, but this just goes to show the power of fundamentals and technicals in line with each other. So the technicals pointed to the downside, as I've just covered, this whole low time frame push in the structure, push beneath the previous lows. Exactly the same thing as what we saw previously. I'm not going to scale back. Let's just focus on this. And then, of course, using a supply zone, okay, supply zone and a key level, 2750, as the entry point for a short, retargeting that first imbalance point. If we drop it up to the 10-minute time frame again, that first imbalance point, this point in here, that we wanted to see retested before. So the idea was that when we tap this level, chances are we were going to go bullish. Okay, and from there, that's essentially what happened. So this is where the first loss actually came in on GBP AUD. So there we go. That's that trade. Let me just jump back over to the Discord and we'll just show again the results for, I believe, the second week of trading on October. Was that the second? Yeah. Okay. So that includes these two here. So that includes those two trades there. That's them two finalized. And then these two here, GBP AUD, GBP AUD. Of course, the first on the 10-minute time frame, and then the second on the 5-minute time frame there, for a total of 9.5% profit across these two trades. So 4 wins, no losses. Now, if we actually look back at what we just said there on the first few days of this week, where we did 2 wins and no losses. Now, this was in the one day we did these GA trades, so that's really, really nice. If we look back here, where I said the quality over the quantity. So we only took 2 trades, but we made some great profits. Now, if we look here, this includes the second bit of GU, and then, of course, these 2 GBP AUD trades. And what that shows is just 2 more trades and some amazing profits, okay? 20% over 4 trades. We had no losses. Now, this is a real great example of quality over quantity. We don't need to be diving into the market. We don't need to be trading non-stop all the time. We just need to strike when the opportunities are right. So let's shift over now to the third week of October. This was, quite frankly, a shit week. Okay. We didn't come out with a loss. We came out around break even, 9 pips profit, 0.75% profit there. So if we look at this, how many trades? 1, 2, 3, 4, 5, 6, 7, 8. 8 trades, and we will break even. Now, this takes us back to that quality over quantity. Now, what happened here? I will say what most likely happened here is I got excited about the profits over these first 2 weeks. Generally, this week, this amazing 20% week, and I was then in the mood and in the moment to chase the market. Okay, feeling invincible. Now, I am on top of my mindset, but we do all have emotions as humans, and when we see this kind of thing, when we see this kind of profits in such a small time frame and 4 wins in a row, we can actually then get attracted to, trading and trading and trading as much as we can. So what that actually caused in this instance was me to chase some trades. Now, the first trade this week, GBP AUD, that's the only trade we took on GBP AUD this week, and it was a loss. So I'm going to just talk through the opportunity there where we actually took that loss on GA. So what can we learn from that one then? So all of these ones really, really nice. What I'm actually going to do is just clear this now, and then we'll move on to the next trade. The next tradable opportunity was very sudden, very fast after this one. So let's just scale this forward. I can remember now where this trade generally was. So what I was looking for is a reshort. Okay, and this was the point. This was the point where we entered. So what I look for here was a reshort. Now, this was my mistake. My mistake here was not following the overall bullish trending structure. Okay, as I said, these first 2 moves where we caught those great profits, they were counter trend. Okay, we spoke about that. And we were being sensible with our targets. Now, this GA trade, this 40 pip loss, if we bring it over to the GA channel, let's find it. This was black candles. There we go. That was this movement here. Okay. And what I wanted to do was bring it back into that level again. Now, what I should have actually noted is that after the wicks traded into there, we had a massive rebound. Okay. So that shows that we've got a lot of buying pressure in this level. Now, generally, I was probably trade chasing. I'm not going to deny it. That's what these videos are for myself to learn and for you to learn as well from the positives, the negatives, the wins and the mistakes that are made, so that you can go ahead and avoid making those mistakes yourself and also follow some of those methods to catch the wins yourself as well. So that's the trade. 1.8250 provided the entry, 40 pips stop, 100 pip target. Let's just mark that on there. And we did use a sell limit because I was asleep. So 40 pip stop, 100 pip target. That is the trade that we were looking for. So as it started, let me just talk it through. Basically, bearish move down, traded into there. I was essentially looking for price to go trade back into this level again. Now, probably shouldn't have. Probably should have accepted that there was a lot of buying pressure in here and the market was going higher. But generally, I did see possibility to get down there. Now, why is that? Because after we traded into that, we saw these higher highs, higher lows forming. And then after this higher low, we had a big drive up and then we actually had a push through. So this push through took us beneath that level. Now, yeah, that is a very similar opportunity to the previous 2 trades we took, which is why I got carried away into this. But I didn't really take into account the amount of buying pressure that's in this level. So that is generally probably what I'm going to learn from this, okay? The level was retested. We are in an overall uptrend. We know that because of the first trades we took, how the market actually took out the trade at break even and then started forming higher highs and higher lows on those higher time frames. So this reaction here should have really been treated as the retest. And then I shouldn't have actually tried to sell back into this level again. Now, yeah, we did get those low time frame confluences, but it's all about context once again. I should have thought about the fact that we did trade into that. We have retested it. We're probably not going to go that low again, considering we're in an uptrend. So generally then, this is why I took the trade, even though it lost. It's good to learn from. Higher low, lower low there. And then what we actually did was form a lower high, okay, another lower low, and then we came up, traded into this supply zone, and began to form another lower high. So that is the area that I actually entered the market using a key level. Initially, we had a great reaction, got a bit confident about the trade there, and then we got burned, okay? I think it was a fast reaction, was it? Well, seeing this actually playing out on the chart then, it makes me think, damn, why did we not break even that trade? So there's another thing to learn from. This trade ran quite healthily into profit, actually half the way to our target. Now, at this point, I should have bit the bullet and actually just put the stop to break even. Now, that would have completely avoided us losing. Even if we missed out on the profits, we would have avoided a loss. But as it stands, I did not do that in this instance, probably because I felt like my bias was so right after the 4 wins in a row. Considering this is the 5th trade, okay, this is the follow-on from those 4 wins in a row, as you'll see. Okay, so we had 4 wins. Next trade, GA, was this loss. Now, this set me straight a little bit and put me back into that mindset. Okay, we can lose. So what can we learn from this trade? Generally, then, focus on the context, focus on the trending structure, key levels. Have they been retested? If they have, don't bother actually trying to sell back into there again if you're trading counter trend like this. Now, another thing to learn is make sure you are actually managing your trades as best you can. If a trade moves this far into profit, now let's look at that. 1.2, 1.25. Now, 1.25 risk reward, we saw, multiple structure lows given way. It's totally my fault for not actually moving this stop loss. And what that means is that we did end up waking up to this trade as a loss, or at least I think we were already awake. I think it triggered in the night. Well, at least when I was asleep anyway, time zone differences, whatever. But then it came back up and it should have took us out of break even, but I probably was being a bit too ballsy with it, and we ended up taking a loss there. So there you go. That's an example where it didn't work out as well, because of course it is good to look at the examples where the trades don't work. And generally, it is what it is. As you can see, the trend structure is king here. Higher high, higher low, higher high, equal low, higher high. That there was that higher low point, but we didn't actually accept that, and I tried to sell back into it again. Okay, so that's where we went wrong, not following the trend structure perfectly. So the next trade then was the best of the month. This was my favorite trade. It was an accumulation. I'm sure you'll all remember this one. Really, really nice trade. Fast profits. And it came out of this accumulation area here. So I'm going to dive over to the chart. This was the final week of October. GBP AUD 165 pip, 9% profit on that move. So that was once again the star of the week for the final week. So Euro 10 pips, sure, that was probably an early closure. GA 53 pips. Oh yeah, that was the mini trade. So I'll talk through that one as well. That was a nice trade too. The reason the percentage was small on that one is because we used minimal risk. So this could have been another amazing big profit trade. But why risk your profits when you've made a 9% week? So this GA trade, let me find it in the channel so you can see it before. This GA trade, here we go, starting here then. So GBP AUD is accumulating by the looks of things. Oops. Still looking for the original short sell opportunity from this point, okay, as we already were, because I'd spoken about that, I believe. Looking for a sell from up there. Think we have some healthy buying opportunity into there. I'm cautious to purchase right now. The equal lows and the 0.250 key level remain beneath. Okay, this point here, as you can see marked out on this chart. I wanted to see the liquidity beneath this level. So now we know about liquidity. If not, head over to the Education Center. I've spoken about it enough. Equal low, equal low, equal low, equal low, so on. So what this shows is actually the sellers leaving the market and buyers entering the market. So this is an area where the market is likely to move up from. But what do we know from what I've taught you in the market? Things are generally not as they seem. What we're actually looking for is, rather than the accumulation like this, we are looking for the liquidity point, the liquidation area. So if we look at the market then, key level 1.82250, we can see that that lines up with this nice supply zone. Now there's also key level 1.8250, but if we look at it, it doesn't really line up with anything of interest, okay? It's up here before this kind of whole level is tested. Now, the reason that this was so attractive to me is because I knew that there was buyers entering the market, but I also knew that the chances of the market moving up from here are very slim, because the stop losses of the people entering this trade, all of these buyers, their stops are beneath the low. That is general education, the general motions that people are following. So we know there's a lot of stop losses down here. Now it comes back to the liquidation and the institutional players trying to fulfill their orders. So as we know, banks, institutions, financial trading firms, they are all trading with huge capital. Capital so big that they cannot simply enter a trade. There is not enough liquidity. There are not enough people on the other side of their trade to actually provide the orders. Okay, for example, if they want to buy here, they need someone to sell to them because there's just not enough volume, not enough liquidity in the market for them to buy up as much capital in this trade as they want to. So they have to liquidate orders. They have to find someone to sell to them. So what do we know? We know retail traders are buying in and around this area, and their stop losses are generally the general education stop beneath the low. Okay, so stop loss beneath the lows. We can see very clear accumulation here, and when those stop losses are triggered, their buy orders will be sold into the market. Okay, so the institutional players need someone to sell to them to trigger their orders, right? So what does that mean? They're going to push the market into the liquidation point so that all of these guys sell their orders to them so they can fulfill their huge orders ready for the move up. Now, that is something that I know that is one of my leading indicators, so to speak, on how I trade. Okay, I try and follow the institutional money, the big money order flow now. Yeah, I'm not going to say my methods are institutional because I've never worked, I've never traded inside of a financial institution, inside of a bank, anything like that. So I purely do not know how they trade, but I do understand the flow of the market. I do understand that the orders they're trying to fulfill are so big that they need to actually take out these liquidation points to trigger their trades. And that is actually how I aim to trade. Okay, so I suppose I do take quite an institutional approach, so to speak, but that is only because I'm trying to replicate and I'm trying to flow with them, not because I know exactly what it is that they're doing. So this trade, 6.25 risk reward, 32 pip stop, 200 pip target. So there we go, 32 pip stop, 200 pip target. Okay, and that is, jump into the 4-hour chart, the move that we were looking for. Now, why? Because it takes us back up into that area we wanted to short, which was 1.8450, this area here. But of course, we don't want to use that as our target because we could roll over before that. So I gave it a 25 pips. This zone here is where we wanted to take the profits. Now, this would generally form kind of inverse head and shoulders pattern, ready for the big sell back down. So I knew I didn't want to enter the trade unless we go trade back down into this level. And watching the market, what did it do? Bam, straight into there and then straight up into the targets. Now, I believe we took it early. Did we take it early? 165, 185 pips. Dived out 165 pips. So this was trading into the short zone. And that is why I decided to get out, because I knew that the market was generally going to roll over soon. So yeah, we could have held it out longer. Yeah, we could have fulfilled the target. If there's anything to learn from this trade, it's that my analysis was right and I didn't need to worry and I could have just held it out. But all I'm going to say is the profits that we secured on this, which was 8.7% total, was crazy. Okay, considering it's a 1, 2, 3, 4, 5, 6. I remember I was out for the day this day. I entered in the morning and by the afternoon, we'd secured 9% profit essentially, which is absolutely amazing and great profits to work with. So there we go. That's GBP AUD, the move up. And then the next trade, the final GBP AUD trade of the month was this one here. This 53 pip, 1.25% move up. So if we look at the near-term market structure, it was at this point here. It was at this point here in these lows where I saw, okay, the market's coming back. The market is, chances are we are going to go and trade into that region that we want to see. Okay, we saw price trade in, we saw it push down. I just want to see that 1.8450 met, and that is the final point. Okay, I think we can finish this off. Let's actually go in for another buy. Now, why did I go for another buy? Well, we see here 1.83750, the support floor. We saw a clean bounce. Can I go to the 5-minute chart? Yep. Saw a clean bounce. And we saw the market then turning bullish. So this is where we actually look to get into the trade. Let me roll it back over to GBP AUD and I'll show you the trade that we took. So 1.83770, okay, was the entry on this one. 1.83770. And we went into this with a stop loss of 1.83547. So 22.3 pip stop. And the target was generally 1.8450. So this one, considering the nature of the trade, considering the fact we were trading on such a low time frame, that is the reason why I decided to actually go in with such low risk. Now, I recommended going with quarter of what you normally risk, and I went in with 0.5%. So this trade played out magnificently. We did then close it early, closed it in this area. Now, the reason being, why is that? Because we have this buy to sell candle, okay, this kind of manipulative candle that pushed up just a little bit higher. This then formed a supply zone. And I was then focusing on the fact that, okay, yeah, we had this very minor higher low, which had been taken out then with a lower low. So when we traded back into this point, I thought, okay, yeah, we could pop through and fulfill the target, but we could also roll over from here and let go of all of the profits. So for the sake of, a few pips, forget it. Let's just get out. So we did. Got out up there. How many pips profit did we get out with? 53 pips, 1.25%. So let's just move that down. Okay, we let go in total of 20 pips, and we did secure then 1.25% at 0.5% risk. So a really nice trade to finish off the month. And that is the reasoning behind it. Simply, okay, reaction from a key level. As we can see, chances are we haven't actually fulfilled this level yet. So chances are we are going to fulfill it, which FYI, for your information, we did go and do. Yeah, we came down a little bit first, a little bit choppy, but eventually the market pushed through and we did trade into that level before the big short came in. So we do then have some trades to talk about in November. There we go, bam. We do have some trades to talk about in November. The big GBP AUD short that came off the back of this move. That really nice start to the month that secured us a healthy percentage, which was generally on this run back down. Yep, that run back down there. But we're going to talk about that in the November breakdown because, well, it was a November trade. So for now, that is all for this video. I've broken down for you all of the GBP AUD trades that we took this month, the wins, the loss. We just took one loss out of all of those wins, which is very, very impressive. Now, it's not going to be like that every single month, but that's a great thing. The losses generally are the big ones to learn from. Now, obviously, it's good to see wins. It's good to see winning analysis, but the losses are just as valuable because the losses help you to learn why they happened and how you can actually try to avoid them or work on building your skills so that you avoid them more often in the future. So that's generally it for this video. Now, I do have some analysis to share with you, but I'm going to do that tomorrow. Don't want to drag this on. Hopefully you've enjoyed this. Hopefully this is valuable. All feedback is appreciated because, of course, I want to see whether or not this is something you're interested in or something that, isn't too exciting or interesting for you. Because, of course, I do want us all to work as a team, as we always do, to come up with the best ideas and the best content for everyone out there. So thank you for watching. Hopefully you've enjoyed. Hopefully you've learned a thing or two. And I will see you tomorrow with the fundamental update and also with a little bit of technical analysis to share with you as well.